CASANOVO Partners proudly announces the launch of a new private equity fund dedicated to the development of affordable housing in Latin America. This fund provides a unique opportunity to participate in a socially responsible investment of relatively low risk. The funds are being raised for the construction of 15,000 quality affordable housing units for lower middle income buyers in Brazil, Chile, Colombia, and Costa Rica. Forecast models predict an internal rate of return to investors of more than 20%. CASANOVO Partners president and founder, Miami-based real estate developer Carlos Rodriguez, explains how the concept for the Affordable Housing Fund took shape.
As a U.S.-based real estate developer that was raised in Costa Rica and that has done business throughout Latin America, I've been, very keen and interested in following what happens in Latin America. And I'm seeing that while there is a huge critical shortage of good housing throughout Latin America, for the first time, you have people having access to financing to purchase their homes. And at the same time, for the first time, due to the multinationals bringing a lot of new jobs to the different countries, you have people having better wages. And therefore, there's a rising middle class. So now you have a need and also a demand that can afford to pay for these homes. That coupled with the fact that my partner Steve Blumenthal and I went to visit our friends in Chile a few years back, and we saw the product that they had, the Stichkin Group, and we fell in love with the product. The product was amazing. They were able to deliver to the lower middle classes a product that I felt was, more the style and quality that the higher middle classes and the richer people, usually have.
Our company, Grupo Stichkin, formed 30 years ago, is dedicated to the development, sales, and construction of real estate products in the price range of $40,000 up to $200,000, basically dedicated to the middle class and lower middle class in the best possible locations that we're able to find, and with the type of finishings and quality that you would normally see in a product targeted primarily to the middle to upper middle class. This has been the differentiating factor that distinguishes us from other development companies. With our team of architects and other professionals, we have been able to find the way to create an excellent product with high-quality finishings at prices that would seem to be difficult to come by, and at the same time deliver to people a better quality of life with amenities like pools, gymnasiums, movie theaters, multi-use spaces, saunas, etc. in that product. We discovered that there wasn't that much of a price differential for us to deliver as good quality finishings as were available in higher priced buildings. And we found we could perfectly well build products of top value that provided an excellent quality of life, a better quality of life for those who are making a great effort just to afford their first home. Thanks to this product, we have had annual sales of close to $200 million, and thanks to this product, there are thousands of families living happy and content. And thanks to this product, we have become one of the largest real estate companies in Santiago. It's an honor for us that CASANOVO knocked on our door. Upon seeing our product in Santiago, they became extremely enthused with the possibility of bringing our product to other countries in Latin America. We're doing it beginning with Costa Rica, with tremendous success already, and we believe if we're able to continue this way, we're going to follow the same path in Brazil and Colombia. We're going to keep building in Chile, and God willing, in the future, we'll be bringing our affordable housing around the world.
Couldn't have a better time to be creating an affordable housing fund in Latin America for a couple of reasons. The first is that there's actually now a mortgage industry. For a long, long time there wasn't, for reasons that had to do with sort of inflation, unpredictability of money, and it just was, and the market wasn't actually established enough yet. The second one is that there's an emerging population of people who actually can aspire to a house. And so when you take the ability to borrow to buy a house, and when you take people who actually can't have such aspirations, it's now possible for it to occur.
When we're talking to the Stichkin Group, we also were introduced to the Overseas Private Investment Corporation, an agency of the U.S. government. In talking to OPIC, their research showed and it confirmed that exactly what we felt. and what we saw in our travels through the region. We saw that there was a product that was in short supply, and we had the product for it. We had the team and the product for it. We saw the need. So with OPIC in the picture, we saw that we could take this product into large scale all throughout the region.
The Overseas Private Investment Corporation, OPIC, is an independent U.S. government agency whose mission is to enable the use of United States private companies and capital in fostering the economic and social development of less developed countries. CASANOVO also has a mandate from the Inter-American Development Bank, the IDB, which is the largest source of financing for development in Latin America and the Caribbean.
The debt facilities that we have in place are very important because basically, let's face it, for the last 2 to 3 years, there's been no financing for any developer anywhere. Having this debt in place is a key point for us. We have, the debt in place, we have the pipeline, we have the team in place to be able to deliver when others can't. And quite frankly, that's a big selling point for us. I think that gives us a huge edge, especially when the OPIC facilities are below market rates. We have 2 facilities with OPIC, one for $100 million, one for $10 million. We have the mandate from the IDB for $50 million. And those are facilities that are very difficult to come by.
I find the risk profile of this fund to be very interesting in that it offers a fairly substantial return with what I view as limited risk. A number of different key factors mitigate the risk, but amongst them are the pre-selling of units, the security of funding from OPIC, that we will have at least 2 mortgage companies ready and willing to provide financing before completion of each project.
Well, one of the main factors that mitigates this risk versus other funds, other real estate funds, is that the fact that it's self-liquidating. The product, as we build it, we're selling it. As actually, before we even start construction, we start pre-sales. So therefore, you don't have to wait for 5 or 6 or 7 years to basically get a terminal value or to exit the investment. We're exiting the investment from the very first day that we're breaking ground. And quite frankly, that mitigates the risk for any investor. The other factor is that you start getting cash flows a lot earlier than other investments of this type.
I think an investment in this fund is really quite compelling on a number of reasons. As I mentioned, I like the risk-reward profile. I like that it's not correlated to many of the other risks investors have. And I like that it's really filling a social need. There is a definite need in Latin America for this affordable housing. And I think it's great to be part of a project that's meeting that need.
All projects financed by the Overseas Private Investment Corporation and the Inter-American Development Bank must meet specific requirements for expanding economic development in emerging markets, supporting human rights, and helping to promote social equality in less developed countries.
People think that real estate investments that are socially responsible are only at the very lowest end of the housing market, where people are coming out of a favela or coming out of a slum and they're just barely getting to the housing market. Turns out that one of the errors of that thinking is that for a society to really exist, those who are in that kind of housing need to see opportunities to get something that feels like upward mobility. You need to have aspirations of becoming a middle class, because the ability to get such aspirations causes people to sort of envision a dream. If you think about the circumstances that make it possible to have attractive, affordable housing, there's a set of factors that need to be in place. You need a stable economy, you need a predictable government model, you need upward mobility, you need direct foreign investment, you need a strong internal market. And there are some countries in Latin America where that's true, and there's some countries where it's not true. The 4 in particular that CASANOVO is in all have that quality.
We selected Brazil, Chile, Colombia, and Costa Rica as the countries to invest because in the whole region we felt that those countries were politically the most stable. Economically, they're growing, and there's a rising middle class, and there's an identifiable need and shortage for the product that we can deliver. In addition to partnering with the Stichting Group for developing our product through the region, we've found several key local joint venture partners for each country. In Brazil, for example, we've identified Regias and Unitas to help us work and develop that market. In Colombia, We have identified Proxol, Camilo Congote, and Eduardo Pisano to help us work in the Colombian market. And in Costa Rica, we're working jointly with the Stichkin Group.
Each of the local partners of the fund contribute a minimum of 5% of the equity. So it's 5% up to 49%. So their interests are perfectly aligned with those of the fund investors. Those local partners are really some of the leading real estate developers in each country. They've been very carefully chosen and screened through a process that involves both CASANOVO management, but also OPIC and many of our other partners.
When we've approached many multinational companies to discuss the product that we have and what we're going to be doing in the region, they've been very excited. The Asociaciones Solidaristas, the credit unions, the different multinationals are very excited about the product because, number one, we're improving the quality of life of their workers. We're reducing their commute time. We are bringing a better product at a cheaper, more affordable price for the people. And quite frankly, they're ecstatic. They're welcoming with open arms.
So one of the things that's important to recognize is that I don't join boards. As the dean of a business school, it's sort of my principle to say I need to be agnostic. Because if I join a board, I'm sort of putting the imprimatur of myself as a dean on this. And so it's a highly unusual thing for me to say yes to agreeing to be on a board like this. And the reason I've done it is that I believe that CASANOVO represents a really important factor in the countries that they're trying to contribute to. So, for example, in Chile, there's a huge need as a result of a recent earthquake. There's a lot of people who can afford houses, but they're not there. In Brazil, there's an exploding economy. There's a lot of people who would like to have a better life, but the square footage to live in just isn't available. In Colombia, the same thing. In Costa Rica, the same thing. And so there is a set of people who have a major need that's not getting met. CASANOVO makes that possible. The wonderful thing about that as an example of something we'd like to see more of is you have an obvious great investment that's meeting a really, really, really important social need. It's not often you get the chance to do that, right? And it's not often you get the chance to do that with something that's relatively secure, right? And so the returns, because of the circumstances that are in place, are pretty good. And so as a business dean, it's kind of nice to see every once in a while that you can do good and you can make money at the same time, because oftentimes those two don't coexist quite so easily.